Hello everyone and welcome to your Glassnode video report for week 16, 2023. So today we're going to be looking into the big question, which is the Bitcoin bear market over? And I'm going to spoil it straight away and say that nobody actually knows. But what we can start to look at and what the really the power of on-chain analytics is we can look at the behavior of investors. So a better way to frame this question, probably a more important one, and one that's actually somewhat answerable is, are investors behaving as if a bear market is behind us? So, of course, we have to remember that markets are volatile, crazy places. They can do all sorts of things that you do not expect. This is not the nature of the beast to try and predict the next move. What we're looking for is, has investor behavior changed? You'll see this is the common theme I keep coming back to with on-chain analytics because really this is what it is all about. So we have seen remarkable price performance. We actually touched on this last week. We saw the strongest quarterly performance, and we're up over 100% from the lows. If you take the lows down there at 15,000, we got over 30,000 this week. So we're up over 100%. So clearly it has been an out of bounds for a bear market. It has been one powerful bear market rally, if it is one of those. But also we can look at several other metrics to see whether a robust recovery is underway. So we're going to be looking at this from really two different angles. The first one is from the long and short-term holder cohort view. You know that we often look at the long and the short-term holder cohorts. However, I actually want to introduce an interesting concept here because quite often people think of long and short-term as hodler and speculator, but there's actually a particular time where we currently sit where that interpretation is maybe not quite so right. Now, we're also going to look at our signals dashboard. Those who've been watching this channel for a while, this one on the bottom right here will have seen this before. I want to bring this in at the end because it is a really, really powerful tool and it's something to help us understand just how well we are recovering. Do we actually have a sustained recovery? And of course, it's a tool that we can use to spot if anything changes, as things tend to do because markets are volatile creatures. So thank you all for tuning in. Hopefully you'll pick up something new, particularly around the long and the short-term view today. Please do give us a rate, a share, and a subscribe. It does help this channel get out to more people, and let's get stuck into the analysis. Okay, so starting off with a view of price, we're looking here at the quarterly in orange, monthly in blue, and weekly performance. You can see here, we did talk about this last week, so I'll just touch on this briefly. You can see that this has been a sustained, basically 2023, a sustained period of strong performance, up over 100% from top to bottom, if we consider the lows that we set back here in November. So over 100%, and I think it was about a 70% move on the quarter. So a very, very strong period of time. It looks somewhat like the previous all-time high. It looks a little bit like what we had back here in 2019, albeit it got even more momentum to the upside. So really the important thing is that this does stand out. It has been a standout opener to the year. Now, we also recently rolled out some Forex and commodity metrics. You will find these in the dashboards. So you'll find that under market, there's a Forex and a commodity section. So we do have gold, silver, and oil prices. So we can start comparing and looking at correlations. What I've got shown here is Bitcoin's correlation to gold on 3 different time frames. We've got the Bitcoin price here in the gray. We've got the gold price here in the gold. Surprise, surprise. And then in the colored oscillator here, we have the 30-day correlation. In the red, we have the 90-day correlation. And in the blue, we have the 1-year correlation. So really, what we can see here is that we kind of oscillated all through 2021 and 2022. There was periods when we were correlated to gold, and then we decoupled to the downside, and it was quite choppy. But note that really before Luna, or as Luna started to collapse and the market really got into the whole macro environment of interest rates rising and all that behavior, note that the 90-day and the 30-day started to climb and the 1-year correlation really started to pick up. And really, for the last 6 to 8 months, let's say, we have seen a lot more positive correlation, both to the downside, but also now to the upside. So you can see that the 90, the 1-year, and the 30-day correlation are all quite strong with gold right now. And this really comes off the back of all of the banking challenges been going on in the USA. So it's just showing that there's these changes that can take place over time in the way that Bitcoin as a sound money contender is starting to be considered in the market. So as this data evolves over the coming years, it will be very interesting to kind of go back and look and see how these correlations played out. And obviously they chop and change over time, but these bigger picture trends do start to develop. So we often talk about long and short-term holders, and I often get lots of questions. This is one of these topics that comes up over and over. When we talk about long and short-term holders, there's actually a document in the description of this video below. It's a technical term. So when we talk about long and short-term, we use a 155-day threshold. And the reason why, if a coin has been dormant for 155 days, when you run a probability analysis on all of the UTXOs in the entire Bitcoin set, typically speaking, once they get beyond that age, they're very, very improbable to be spent. Coins that are younger than 155 days are much more probable. So it's actually a technical distinction based on the probability of being spent. Now, usually and intuitively, we think of long-term holders in blue as being hodlers and short-term holders as being speculators. Now, this is generally true. If we look at this bull market here in 2021, note that the short-term holder supply here in red climbs with price. That's because the long-term holders are selling the coins they bought in the bear at an increasing rate, transferring them to new speculators, brand new buyers, and top buyers, essentially. Now, as the bear market kicks in, this trend starts to reverse. Speculators lose interest and coins are gradually, slowly, but surely taken off the market by these long-term and very patient hodlers. So patient, in fact, that many of them bought the top and rode this thing all the way down. So we get this kind of stagnation in overall supply. Now, what's important, and you'll see here in the area charts, we've got blue, and this is pretty much on the FTX, only just past it. This here is the 155-day threshold. So generally speaking, in a bull market in particular, yes, long-term holders are hodlers. They are the ones selling to speculators. This is true. However, once every cycle, near the bottom, this actually swaps over. Because the long-term holders, generally speaking, are people who bought the top. Most of the long-term holders from last cycle sold in the bull, as they're supposed to. What we see during the process of a bear market is a bunch of people buy the top and hold their coins thinking it might come back, and they become long-term holders. Now, when we see a bottom get put in like FTX, remember back then the narrative was that Bitcoin is dead for another decade. At that point in time, the people who are capitulating are disproportionately the top buyers, who are the long-term holders. And conversely, who are the people stepping in to buy when Bitcoin is dead for 10 years? Some seriously hardcore hodlers, people who believe in Bitcoin rain, hail, or shine. So it's one of these very interesting dynamics where at the bottom of every cycle, the actual situation flips. So we have to think about long and short term, not necessarily as hodler speculator, but when did they acquire their coins? The people in the red here acquired their coins after FTX and into this rally. And the further, if this rally does keep going, yes, eventually we will see this thing turn into the normal speculators. But really, the people who stepped in and bought their coins down here are seriously hardcore hodlers. They are likely to progress towards long-term holder status. This is what that resetting and changing of the cycle really looks like. So anyway, just a bit of insight in terms of the technicals. Think about short-term holders as people who recently acquired their coins. Think back 5 months ago, what was going on? It was the end of Bitcoin. So people who are buying their coins back then, they got some serious grit. That's the right way to think about this. So with that as context, we can now move across and look at our price distribution. Where were all the coins in the supply acquired? So there's kind of two major long-term holder buckets. Down here is the old cycle, right? This is the 2018 and before cycle. These coins have been static for a very, very long time. They're in a very, very favorable situation. These people up here are the cycle survivors, people who still hold their coins from 50,000, 60,000, almost up to 70,000. There are still people who hold their coins from up there. There's a second cluster down here. This is the 15,000 up to 25. This is where we really ranged for about 8 months since Three Arrows blew up back in June 2022 all the way through to really January this year. Actually, it probably even got into February. Everything under 25K from this cycle. And you can see it's kind of a healthy balance between long-term holders and short-term holders, right? Pre-FTX, post-FTX. They're the two groupings here. Now, the other one to note is between 25 and 30. This group is much heavier short-term holders. These are breakout buyers. They're also people from up in this tier who actually sold, give me my money back now that we're at 30K. They're people from here that took profits. So there has been a bit of a supply redistribution up into that 25 to 30. But if we look at it in a very holistic sense, that 25 to 30 zone is quite full and it remains quite a bottom-heavy market. Now, the important thing to note is as we head higher from here, there's a bunch of people who may be waiting to get their money back. They've been through a year and a bit worth of pain. And if price gets up to 40,000, these guys may well just want to get their coins back at the same time that some of these folks may want to take profits. So we're kind of sitting at the top of what I would call the neutral zone, where there's not really any gravity. We're not down here at this extremely undervalued dead territory we're in at 15K. We're also not hovering around at 60,000 or at Balaji's 1 million, which is kind of a bit overvalued at this point in time. We're kind of sitting where there's not too much gravity in either direction, but at the top of a fairly healthy and large supply cluster, just to help you kind of navigate and understand where we are in terms of human behavior and coin movements. So this is just a nice way to map out and visualize these cycles. And I want to take you through 3 different zones just to kind of really imprint what's going on here. So what we're looking at here is long-term holder supply as a percentage of the total. In the dark blue is long-term holders in profit, and in the light blue is long-term holders in loss. Now, I'm going to call this top. Note how during the 2015 and 16, this is kind of a big sideways pattern. You know, it oscillates, but it's more or less sideways. We can see it here in 2018 and into 2020, and we can see it really since the all-time high onwards. This is what I'm calling the plateau of patience. This is long-term holders slow, like actual long-term hodlers is probably the correct term here. Hodlers taking coins off the market, putting them into cold storage, and it kind of hovers up and around all-time highs. We're not really getting too much more accumulation. There's a bit of spending going on. It's just kind of flat over time. But then note, as we come towards the end of that period, which is typically early bull market here in 2016, early bull market here in 2020, what we see is that we start to get a decline and the coins go back into profit. Note that profitable coins climbs whilst the total coins start to decline. This is basically showing that price is putting all of the long-term holders back into a profit, and this is what we call peak hodl. This is the point in time when the maximum number of long-term holders have held onto their coins, they've weathered the volatility. It typically happens as we break the previous all-time high, and then they start to spend. And this is then the distribution. And then obviously the cycle repeats. We go back up towards the plateau of patience. We see that we have the peak hodl. We have massive distribution into the bull market, and the cycle tends to repeat. Now, the key takeaway here, we are some distance away from hitting that peak hodl point. And this is because there's all of those coins, 40, 50, 60,000 that are still underwater. That's essentially resistance that the market has to break through if it wants to get back up towards that all-time high for this cycle to repeat. But anyway, just giving you a bit of a roadmap or a bit of a snapshot on how these cycles have played out in the past. Of course, that's not necessarily how this one will play out, but at the very least, you can see that investors tend to have the exact same behavior patterns time after time. So bring it back to our dashboard here, and there's just a couple of things I want to highlight. We're going to start trending our way back towards that signals dashboard for those of you who've seen that video before. There's a couple of things I want to snapshot here, which I think are quite useful to understand. Where are we in the cycle? So the first one is when we look at our percent supply and profit. Note that we've had an extremely strong bounce off the bottom. We're really only getting above, right? 30K, we're about 5K above that $25,000 bottom formation range, right? We spent about 8 months since June to there. All of the coins that were in that zone have now been repriced into a profit. And we see these very strong moves following every single bear market floor, right? And again, we don't know that it really is the bear market floor, but certainly in terms of the characteristics, it certainly looks like previous ones. This very, very strong push higher is telling us there's a lot of coins below us. And we saw that on the charts before. Now we can also look at Nupal, right? This is a crowd favorite metric. It's basically looking at the amount of unrealized profit or loss in the system. Now, where we currently sit, it's about 0.36. Now, the number is actually less important than kind of where that sits. This one here I've called Nupal percent days above. And what I'm basically saying is that this brown line here is what the current value of Nupal is. And the blue curve down the bottom here is the percentage of all trading days that's been above it. Now, this is currently sitting at 55%, right? Which means 45% of the days were below it. The other way to think about that, plus or minus 5% amongst friends, it's roughly in the middle. We've spent half of our time more profitable and half of our time less profitable. It has essentially returned to neutral. There's not really any gravity in either direction, and it kind of aligns with that URPD chart we saw, which is that we have a huge cluster of people who bought the bottom underneath us, and there's a whole bunch of people who are still underwater above us. And we're kind of in this middle ground, this kind of middle nebulous zone that's in between both of those extremes. There's not really any gravity to the downside nor gravity to the upside. So in many ways, we're kind of in a bit of a price discovery type mechanism where it's kind of equal and opposite on both sides. And it's really going to come down to that supply and demand balance. So we can also see this in the realized cap hodl waves. We're actually going to pair this with the realized hodl ratio. Both are very similar based off the same thing. The key takeaway here is that we're looking at the dark red colors. These are coins that are younger than 3 months. Now, by proxy, if a coin is not younger than 3 months, it means it's older than 3 months, right? It's a binary system. Now, we can see here that these coins younger than 3 months are extremely low. These orange colors are very, very low. We see it here in 2015. We see it here at the bottom in 2018. We have a very, very small population of what we call hot coins. Now, we do see these uptick, like in 2019. This is kind of a period of profit taking, which created a second miniature bear market. We see it in 2016, which was like all of 2016 for the most part was a big sideways consolidation. The market just couldn't get above this kind of neutral zone. So we're starting to see this tick higher, and it's telling us a very similar story. We're kind of heading into that reaccumulation type period where the market can't just go up 100% anymore. It's actually really got to do some work to churn through all those people who've been underwater for, 12 months. We can see this in the realized hodl ratio. Very low values means that there's a large saturation of hodlers. High values is a high saturation of speculators. Lots of hot money, lots of hodler money. And you can see that we've started to bottom out of the hodler zone, and we're kind of in that middle territory here. I can't remember the exact number. I think it was about 65% of all trading days are above, and that means that 35 are below. Not quite back to neutral, but also certainly not down here at the 10% of trading days being below type territory. So again, it's many metrics kind of pointing to a similar thing, that we're kind of in the middle. We're kind of in the neutral zone. There's not a great deal of gravity in either direction. And then lastly, we're going to look at things on the on-chain activity side. Now, naturally, there's a lot going on both in terms of ordinals and inscriptions, which are kind of transactions that don't necessarily have to have a lot of volume to them. There's also a volume component here. But we can see here that our transaction count, both on the standard and actually on the entity adjusted, this is looking at removing all exchange-related activity. It's only looking at when coins are really changing hands. This is pretty much not quite all-time high, but cycle highs, right? So we're at 270,000 organic transactions per day. This is a very, very strong push higher. And not only that, this is our fee revenue Z score. On the 2-year basis, we now have a positive territory. Note here, 2019 was the same and it turned into a bear market. So that's why we have to track these things over time. The 4-year is in the process of coming up to break even. So the real takeaway there is that across our on-chain activity space, we've got more adoption. There is fee pressure. There are people using the Bitcoin network. And this is generally speaking quite constructive. Now, we did release this signals dashboard. Let me actually just jump across to it now. This signals dashboard you will find, and it's essentially trying to track this very, very concept of, is the Bitcoin bear market over? And of course, nobody really knows, right? Until you look back into hindsight. But what this is trying to do is saying, okay, well, we've got a series of different on-chain topics that can help us at the very least answer if investors' behavior looks like it's coming out of a bear. So when we look at the green, we're looking at key pricing models. Are we above the realized price and the 200-day moving average? You can see that we have a strong green bar at the moment. So the answer is yes, we have been for most of 2023. Do we have increasing momentum in network utilization? This is active addresses and fee pressure. And the answer is yes, we do. We have an uptick in active addresses and we have an uptick in fee pressure. Is there profit being taken from the market? And that generally indicates we've hit a point of seller exhaustion, which we saw in that capitulation back there where all those coins got distributed lower. Profits are being taken because it's pretty hard to take profits in a bear. And the market is actually able to absorb that sell side. I mean, we're up 100% since the lows and profits have absolutely been taken. We have a blue bar, so that is also firing. And the last one, which we touched on with the R-HODL ratio, is there a balance of wealth in favor of those long-term hodlers? And the answer is, in the purple bar here, yes, it is. So there's 8 metrics in here, and you can see that the dark blue has started to fire off. This means that all 8 of those indicators are currently saying that what we are seeing is a robust recovery from a bear market. Now, just to caveat these things, you can see here in 2019 that we also had this period towards the top. So did we have here in 2021. These things are trying, but you can see that this also started firing back here in early January. So this thing is there is no silver bullet to these things, but what we're looking for is changes in investor behavior. So here's a good example. We had this thing go back into, 5 out of 8 were firing just before Luna collapsed. But look at the one that was firing the most, people taking profits in the blue. So there's signal in all of these things. What we're looking for is, do we have confluence across the board? And in this instance, we've essentially had 5 out of 8 for this first leg. And then over the last couple of weeks, all 8 of these have started firing off. So it just gives us a bit of a gauge into what's going on. Do we have things across supply, on-chain activity, price levels, hodler balance? And if you kind of compare that to what we covered in the first part of this video, we're kind of sitting at that neutral zone above where really that bear market floor seems to have formed. There's not necessarily gravity in either direction. Now the market really has to prove itself. It's kind of in neutral territory. It's come out of that very, very deep value zone. And now it's essentially got to prove itself and make its way through all of those hodlers who bought up at 40, 50, 60,000 plus the profit taking. That is essentially the mission that Bitcoin has to traverse from here. And 2019 and 2016 have been 2 examples where we had a miniature bear market and also a 1-year sideways consolidation period. So it can kind of go in both directions. So thanks for tuning in for that session, folks. Hopefully you found that useful. If you do have any questions at all, please do let me know. It is a very interesting dynamic here. We don't see this kind of long-term, short-term threshold very often. Where short-term holders essentially stepped in and bought the lows when Bitcoin was dead for 10 years. But this typically happens once every cycle. So whilst we can never perfectly answer and never know in advance whether a bear market is behind us, what we can say is that of many of the metrics that we look at in terms of on-chain activity, pricing models, profitability, many of the things that you typically see in investor behavior following the end of a bear market, we have quite a bunch of these playing off at the same time. So again, just provides us with a bit of a tool to help track whether things are hot, cooling off, where we are in this cycle. But hopefully that was useful. If you have any questions at all, let me know, and I will see you in the next one. Cheers.